As the new year approaches, the market's rocking. Holiday sales soaring. And President Trump is promising we haven't seen anything yet. So as tax cuts get ready to kick in, will the markets keep kicking up? Happy New Year, everyone. I am Trish Regan, in for Dagan McDowell, and this is Bulls and Bears. The Bulls and Bears this week: Gary B. Smith, Jonas Max Ferris, John Layfield, along with Deneen Borelli and Danielle McLaughlin. Welcome to all of you. Happy New Year. Gary B., you think 2018 will be a great year?
I do. First of all, Trish, welcome to our little family here. It's nice to have you on board.
It's a pleasure to be in for Dagan. She's great and getting some much-deserved time off.
I think that 2018 is going to be a fantastic year. Here's why. We already saw a glimmer of the great year with the GDP finally back over 3% for the previous quarter. Now you ask, why is 2018 going to be great? Well, what do businesses want? They want to cut expenses, and they want the red tape cut. What are we going to have? We're going to have lower corporate taxes. Trump has done a maybe even better job than one of my heroes, Ronald Reagan, on cutting the red tape in Washington. I think we have a smooth runway for 2018. There's going to be a few bumps along the way like there is every year, but right now I think we're set up better than we've been set up since the early 90s for a super
okay.
economy.
Well, we love hearing that because we all want good things for this economy and good things for the market. John, do you think it's in the cards?
Yeah, look, I agree with Gary B. You take bank earnings, for example. Banks have been up about 7% since the tax cuts look like they're going to be formalized. Now, earnings revisions from the analysts say that there's going to go up 20%. So you haven't seen those earnings revisions from those analysts come to fruition yet, and you haven't seen those put into the market yet. So I think there is another bit of a leg up. Some tax cuts are baked in. I think most are not into the earnings that are coming forward. So I think you're going to see a leg up from that. And in addition to that, Janet Yellen said that there was not a recession on the horizon for the next foreseeable future of 2 to 3 years. So unless you have something in a flashpoint, a hot point like North Korea or the proxy war in Yemen that escalates, and you have a Sunni versus Shia war in the Arab world, I think we're going to be in for the trend continuing this year. I don't think it goes up as much as this past year, but I think it goes up.
You know, Deneen, I've covered the markets for a while, and I can remember back before the bubble hit in 2000, feeling very nervous ahead of that. And then again in 2008, I think I was, scared from 2004 on with that one. So I have a tendency to feel these things. And what I keep saying is interesting about now is I don't feel as worried. And believe me, I'm looking. I am looking for warning signs. Do you think this year's going to be a good one?
Oh, I think we're all looking for warning signs, Trish, and I agree with Gary B. and with John. 2018 is going to be a great year. We've seen glimmers of it for the past year. As a matter of fact, the Dow has been trending up over, I think, the last 13 consecutive months. But I also think there's going to be a slight correction, anywhere from possibly 5 to 10%, because, it can't continue to keep chugging along like it is forever. But I think things are going great. I think 2018 is going to be a great year.
Well, why not? I mean, why does there have to be a 5 to 10% correction, Danielle?
You know what? It's in the lap of the gods. We will see. The Nasdaq is up 29% year over year. Dow Jones up 25% year over year. It's been a banner year, as Deneen indicated. I'm interested to see whether we're going to see more retail investment in the coming year. Tax cut, people have more money in their pockets. Will we go back to the levels pre-2008, 2009 and get retail investors back in the stock market where they can be seeing the incredible gains that institutional investors are seeing?
Yeah, because, mom and pop investors, I would think, Jonas, there's still a lot of money right now on the sidelines because there are a lot of people that really haven't bought into the growth story. I mean, and not just Paul Krugman, who basically said on election night the market was plummeting and it would never recover from the depths that it would reach. There's a lot of people out there that have been waiting for an opportunity. Is now it?
There's been a little bit of a zero-sum game where people who were anti-Trump are, they're taking money out of the market, and people that were anti-Obama are putting money in the market. I don't know if it's a wash with retail investors. I'm a little concerned it's a little too good. It's like we're in this really strong economy. It's the strongest we've had now in many years, and now we're doing tax cuts into it, and like that's a little strange. Like, is it going to cause inflation? Is the Federal Reserve going to try to fight this perception of inflation and cause rates to go up? It wouldn't take a lot of interest rate increase with the amount of debt in this economy to cost more than the benefit to consumers of the tax cut. There's over $10 trillion just in mortgage debt out there, for example. So I'm a little worried like this, the good times might create bad times, just fears, people looking for a correction. So I'm more worried about the unknown bubble starting that everyone's piling money in or whatever, or rates. To me, we're not expecting it. It isn't obvious. To your point, it doesn't look like a bubble. It doesn't look like there's a real estate underlying bubble. So that's what's dangerous in itself.
We got lots more to talk about. Don't go anywhere.